Morning, everybody. Welcome to my channel, 8:20 a.m., August 20th. What a nuts market. So, market's calling out the U.S. Treasury yesterday by doubling back buybacks. Doesn't matter. Yields are higher. Bonds are being sold. Crazy. The volume is up right now. This morning, it's not low volume. So, Middle East tensions, um, rates are higher again. This is crazy. Walmart had bad earnings. They're down 6%. So interesting. Staples. This is the weird this morning. Okay. Staples are down and the markets are going down. Energy is up. Not a good combination. All right. So ES just took out finally one of the another set of a bullish for value gap inefficiency in the past. So it just did one more. It just took down some poor structure. Still has more to go. Does it happen today? Don't know. Okay. That's what's going on today. Yesterday was interesting, but a bunch of crap afternoon. Horrible price action. Really bad. Okay. But today I think could be a better trading because the VIX is almost above 16. Okay. It should be very, very interesting. The volume is nice right now. All right. Let's get right into it. Welcome to my channel. My name is Steve Gonzalez. Use market profile to find structure of the markets, as well as supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. Once that market opens up, I use my market internals to see where money flows are going, along with a little ICT, Anchor VWAPs, my weekly expected move indicator for Thinkorswim that I give away for free on my Discord, as long as Gamma flip points, weekly and monthly flip points, I give away on my Discord for free as well. Okay. All that wrapped into one is my own proprietary trading system. Now, hopefully you follow me every morning, subscribe, set that alert, give you the morning news, the economic calendar, technical analysis, long and short trade scenarios in the ES and the NASDAQ futures later on in the stream. If you want more in-depth coverage, you're going to join my Discord. Okay, please go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Okay, let me be your indicator. All right. Now, yesterday, short of it, my trading yesterday, I did take a long, very close to the open. I had beautiful excursion. I was like, this is gonna go rip up, and then all of a sudden, wham! I get my stop was smoked to break even, and I was like, okay. And in my gamma flip points that I had on my chart, that the reason why is both markets went through them, and that's what happens. Okay, so yeah, and then after that, I did have I stalked along in the ES, and I almost took it. That would have been a winning trade. Then I didn't really have much after that. All right, but it was such a wacky market yesterday, very wild. All right, and I mean then it settled down. Okay, to then it did crap. Let's get into futures watch list here. Now, obviously there was some news with Bitcoin, crypto, and those markets are ripping up. Bitcoin finally came alive. Ethereum up 8.26%. VIX up 7.32. Bitcoin's up 4.83%. Crude is up 3.65%. Almost at $88 a barrel. I saw that Israel struck Gaza again. 10-year yield is back up 0.90%. Silver is up 0.62. Dollar is flat. ES down over a half percent. Gold down over a half percent. The Dow is down 0.72. Russell down 0.73. Nasdaq is down 0.73. 30-year bonds are down. That means rates are going higher in the 30-year. Crazy, just craziness. Okay. Mag 7 Plus here. Now, Coinbase is the Bitcoin proxy, so that is up 5.37%. Netflix up 0.89, and Apple up 0.34. But then we get into the laggers. Now, what's interesting about this today, it's really not like a semi and tech sell-off per se. Discretionary and staples are the laggards today. So interesting. Okay, so I mean, Amazon's down 1%, Micron down 1.29, Intel down 1.42, Tesla's down 1.46. Okay. Top sectors. Here's what's moving markets, right? This Middle East tension is just not going away. Exxon up 1.66, Chevron up 1.21. Who else is down here? Oracle down 0.88. The mining stock, NEM down 0.95. Costco down 1.5%, probably in sympathy with Walmart. Home Depot down 1.60, and Walmart after earnings down almost 6%. Sectors. Here is the energy up 1.23% and a bunch of red. A bunch of red. So this is an overall market dump. This is why I said that usually when the market's kind of dumping, it's because technology is ripping lower and semis are ripping lower. They are not the laggards here. It's staples with Walmart, Costco, okay, and discretionary with your Tesla, your Amazon, and your Home Depot. Tesla, Amazon, Home Depot are the largest holdings in discretionary. All right, pretty wild stuff here. Moving on to the economic calendar, which is not a lot going on here. Okay, jobless claims don't usually do anything with the market anymore. Philly Fed doesn't really do anything as well. There's really nothing else to talk about there. Okay, now let's look at the Trump schedule today. What does he have today? 9 a.m. President participates in a pre-taped radio interview. Okay, 2 p.m. President participates in signing time, and then okay. Let's see here. All we know here is a rebound in long-dated treasuries ran out of steam, and U.S. stock futures struggled for direction as rising oil prices put inflation risk back on investors' radar. Turkey, Egypt, Qatar strongly condemned recent Israeli attacks in Gaza, expressed deep concern over ongoing violations. All right, looks like Fed Daily speaks at 12:30. Fed Muslim speaks at 11:10. I'm sorry, 12. That was midnight. Fed Daily. So Fed Muslim speaks at 11:10 a.m. Great. Trump speaks at 4, so that doesn't matter to us, the market. What else here? Let's look into some other news here. Gains in AI company stakes June second quarter earnings, S&P 500. Treasury upsides buybacks may complicate Fed's monetary policy work. U.S. stock into future struggle for direction as government, and this is before the market started to rip lower. Struggle for direction as government bond yields rebounded after a respite earlier in the week. Government bond yields retreated sharply in the previous session, and U.S. Treasury announced support measures, but that doesn't matter now. Okay, moving on. Let's see here. What do I want to talk about here? Let's just look at some breath readings real quick. Percentage of stocks over the 20 has weakened down to 54%, which is middling. Let's just look at the 50. We're at 61% over the 50. That makes sense. It's a slower moving average. We'll just do a quick bullish percent index check in here. Remember I said it was getting a little frothy. Oop. Boom. Yeah. See in the 70s. Now we're dropped down to the 66. We'll be lower today. NDX also was overheated. Look at that. Came all the way down here. Boom. All right. And we'll move on. Let's go to a little internal check here from yesterday. So, internally, the story of yesterday. Now, tech was the laggard. Okay. Now, at one point, all these were green except industrials. Healthcare had a banner day. Now, tech was down way lower than this. Way lower than this. And right here, it made a recovery. Right? And then, towards the end of the day, it lost its grip. And you can see it revisited the lows. Okay, it revisited the lows. But overall, the market wasn't really weak from yesterday's close, but from the open, not so much. Okay. So, like I said, you had some movement and then it died. Right? And then it died. And then you had FOMC minutes and Trump speaking. So that always causes, right? So let's see here. We'll go to daily charts now. All right, here's our dailies. Just a crazy, let me say this every week. The markets are just so unpredictable. So unpredictable. It is really something. Okay. All right. So weekly expected move is 765 in my indicator. Remember, that's what the options market from last Friday priced in for this week. Okay. All right. So where are we now? 764. We are right below the weekly expected move. Let's just go to a time frame so you can really see this here. We'll go to an hourly chart. There it is. Okay. There's my weekly expected move indicator, and we are right there. We are right on it. Should be interesting. Now, if you start pushing like this, wow, the market can dump very hard. Okay. It can dump very, very hard. Now you can see to the left, you see this little, all this poor structure. We finally took out only this much. We have all the way down to about 760. Then if you push lower than that, you can take out, there's more poor structure. So this is interesting. Look at how the weekly expected move right here, oh, it happens to stop. Okay. Now let's go back to the daily chart. Let me just change this to 3 years, what I usually have it on. Okay. So, yesterday, what did we do? We closed at last week's lows. 9 EMA daily, right? But we're down here now. We're gapping down. Poor structure. Okay. This, like I said, this could really rip lower. Futures. Here we are. Pushing lower. And there's just nothing going to stop this. I don't see much support here at all. We're heading towards the 20. This is last month's high, 76.32. Okay. Qs. This is how we ended yesterday. We hit the weekly expected move indicator and the 50-day moving average and bounced up. Okay. Closed above last week's lows. Well, guess what? We're at 7.0. We're basically at 710s. Right there. You're well below the weekly expected move indicator. You probably have some support at 707, but 706, 70 is a 20-day moving average. That might be your destination. There's a gap here. Okay. Very interesting here. Craziness in the markets. Okay. So let's look at futures real quick. Here's the daily demand I said. We're still inside it. We just tested the bottom of it. The 20-day moving average is right there. Okay. So we just took out this daily demand. Now look, when this daily demand was made, look how many times we tested it. 1, 2, 3, 4, 5. We finally working this off. Once you work that off, it can make a move lower easier. Okay, but we didn't work it off yet. We didn't work it off yet. Okay. So below last week's lows now. Very interesting. Okay. Moving on to hourly charts now. We're going to quickly go over these. Look at this. Look at this. My Lord. Okay, so if you look back, I just showed you guys this, but this is a better chart to see it. See all this poor structure? The market only came down to this level and never touched it again until right here. Then we got bought up, right? Yesterday. And now look. Like I said, this can go all the way down to 76.60s. Then you have major demand. So this has no support. There should be no support here if this market just goes, oh boy. Now look, think of how many longs got long yesterday. And they're trapped. Okay. The longs have to liquidate here. All right, so let's look at the NASDAQ. Now, NASDAQ took care of that poor structure from the past. Okay, so if I zoom out in the same structure right there, see, once this was in, the market pulled back and took care of all of it. Right? It took care of all of it. Now, this is where it gets a little tricky. There is demand here. I wouldn't call it the strongest of strong. Once you get down, I would say, into the 290s, it gets a little stronger. but there is a lot of demand here. There is a little poor structure left right there. Very interesting. Remember the 297.5s. Look at that resistance multiple times in a row. Okay. So, very interesting here. This is not looking good because it's really like an overall market sell-off. It's not just tech. Okay. Staples are also in there. This to me can just keep falling. Right now as I'm speaking, I just got large order in my ear. Okay, so we're going to move on to the market profile and volume profile. Oh, and let me show you really quickly. I don't have to show you. The volume is up. I mean, when I mean it's up, it's over 100%. The volume is up. So the VIX is up to 16. Okay, so let's check in with this market profile and volume profile. And again, another large gap. Now I wanted to short this thing to get all this poor structure out. Previous, but then when that bond thing happened yesterday, I was just like, oh great, this market's probably going to rally. And then guess what? Market called the Treasury's bluff here. It's not a bluff, but they're just going, no, 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 no. We think inflation's going higher, and the bond yields are going higher again. Okay, so we are gapping down. We are gapping down. Okay, so we just took out that poor structure. Gone. I got to get rid of that now. All right, we're gapping down. So let's get right into scenario. Let's put the headline up here. This is market profile and volume profile. While I put that up, we're going to open up this session. Okay. Look at all that trading in overnight. Up, 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 and then up, 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 and then boom. Okay. Now we're going to do the long and short trade scenarios in the ES. All right. Now, first thing I like to mark off, gap fill. Gap fill is 77.20. Oop, that's a horrible line. 77.20 also happens to be the new most traded price of the week, which is 77.25s. Okay, so that's bearish in itself. The most traded price of the week has moved lower. Okay, that's a little feather in the cap for bears. Now, 50% retracement of the overnight, 77.13. Okay, we just went into and bounced out of a bullish value gap. That's just poor structure and inefficiency from the past. This bullish for value gap, this bullish for value gap spans from 76.82 to 76.56. That could be the next move lower. Okay, so let's get right into scenarios now. And again, it's a large gap, not easy to trade. Okay, so I have my sights set on the 76.56. That also starts an unfilled gap. Okay, that gap, let's see. There's a gap here as well. Let me see if I can really nail it. Yeah. So the unfilled gap from 76.56 to 76.37. So that also could drop all the way to 76.37. I don't know if that happens. Okay, I don't know. All right, let's get into it. All right, I'm going to start off with a short. Okay. Oh, traded price of the overnights. Let's give you that too. We know sellers are here. 76.89 is your overnight VPOC. Your overnight VPOC. And then you have a slew of single prints. That is emotional selling right here. You can see the very thin volume. And look here at the thin volume here. Notice, that's why I'm saying there is no support. Look at this. Nothing. There's no high volume at all. All right? This could just drop like a stone. We'll have to see. All right. Shorts. Let's do it. Now, not easy. All right? This isn't easy. So, what I'm going to do is mark off these single prints, right? So, right here from about, let's just call it 76.90 and change to about 77.13 is the 50% retracement of the overnights. Right here. It's a pretty decent range. But what I would say is if you push up and you get resistance in these singles with a lower high. Target overnight low 76.80s, then go for the 76.56s, and man, if this thing goes, you can fill the gap down to the 76.37s about. Can get very nasty. Very, very nasty. I don't like gap and goes at all. So there could be a gap and go here, and you'd have to build that volume here like this and be like, okay, 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 and then try to find some pullback to go short. All right. So I think that's my shorts. And like I said, the other day when we gapped down, we did nothing. So I really need to see how internals look. Okay. All right, let's go for longs. Now, if, okay, we push down. Ooh, that's too big. Okay. If we push down, and I would say that 76.90, that yesterday's, I'm sorry, overnight VPOC, right? Let's say we do this and we rip above that VPOC, 76.90s, retest it long. I would say target midpoint 77.13s. Hold the runner to 77.25s. Could that happen? Maybe. I don't know. Okay. I really don't know. And honestly, that's probably my only long that I'm looking for. And it could be quick. It could be, just hold on. Okay. Hold on. Now remember, it's hitting my expected move. The QQQ has surpassed the expected move to the downside. I'm well aware of that. I know many stocks will be already below their expected move already. I already know they are. Okay. Now, that is my, yes, let's look at the NASDAQ. Okay. Now, gapping down again. So let's get into scenarios in the NASDAQ. Okay, so first thing we do, mark off gap fill, 29375s, 50% retracement into the overnight, 29464s. All right, we are past this high volume node of 293s. One thing I want to show you guys, okay, is this chart here. Okay. I just want to show you the amount of volume we just took out. You see this volume? That big volume, we are past it. We are past it. This is pretty bearish. Now, the most traded price of this year has moved to 29531s. Right there. See this big volume. You see how much we traded that this year? And we're back under it. That is bearish. Just wanted to point that out. That is very bearish that we cut through it. We came above it and we cut back under it. That is bearish. Let's get back to the NASDAQ. Okay. So, now we just came into supply. Came into demand, we bounced, right? We do have an unfilled gap as well. This is what I want to point out. There is demand here. There is demand here. But I want to point out again, the thin volume. That's not supportive at all. The thin volume is not going to be supportive. There is demand here, but sometimes you can have demand there because you can have a not a lot of volume, but you shoot up. So these demand zones, I would say, aren't as powerful. All right, so just keep in mind, there's really no volume. So keep that in mind. Okay, keep that in mind. And let me give you that gap fill. That gap is unfilled gap is from 29208s down to 28965s. Okay. So now this isn't that far from yesterday's lows. So what I'm going to say is let's start with shorts. Popped out of demand, right? 293 is a high volume node from the past. You could fire up right into gap fill. Okay. Push down, retest 293s. That could be a short. Now you start to go into that gap around the 292s like I just showed you, and we could really start cooking all the way down to like the 289.75s. I gave you the gap. I don't remember what the bottom of the gap was. Okay. So now this is not going to be easy. Right here, I think the Nasdaq's a better short for a struck. You don't have much to go to hit to fill the gap, and then people could take profits and then introduce shorts. But I don't know. Okay, for right now, that's what I'm looking at. Okay, for a long, just the inverse of that. Okay, couple things can happen. We can push down into this gap. Now, if you get buying into the gap, same thing as a bullish for value gap. It's an inefficiency, right? It's a gap. If you get support, you can push up back into the overnight range. Okay, higher low and try to fill that gap 2937 and maybe hold a runner to the most traded price of the year 29530s. Okay, that's all I have. All right, and that's going to be it for me today. Okay, so not a lot of structure below us here, folks. All right, so smash the like button if you enjoyed that. That would mean a lot to me. I appreciate that a lot. All right, now hopefully you join me every morning. Subscribe, set that alert, give you the morning news, economic calendar, technical analysis, and I just gave you the long short trades and earnings of the Nasdaq and the ES futures. Okay, now if you want more in-depth coverage, you're going to join my Discord. That's Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Okay, now we have our plans. Okay, have our plans. I hope you have a plan. Big gaps, again, are not easy. Individual stocks are usually easier to trade on this because they have the individual stories. When the market's down like this, individual stocks are all trying to find their way, which makes the markets a little harder to trade. Earlier on trade is usually easier on these big gaps, okay? Now, if I don't see you live in my Discord, all right, around 9:45 a.m., I'll see you right tomorrow morning. All right, take it easy.